Hello, students. Today we will be doing an accounting paper together. We'll be doing a paper one. Some of my students recently wrote this as an exam, and we will be going through May, June 2018, paper 13, but only the first 10 questions. Because after that, I'm going to leave out a few questions because of the syllabus change, and then I will continue with the rest of the paper on the next video. Okay, so if you can just join me, let me share my screen. This is the paper that we're doing. Just make sure that all the instructions are clear. Multiple choice, 1 hour, 30 questions, but we're just going to be doing the first 10 now. So let's dive right into this. I can already maybe use a marker to choose my right option here. If I need to, I will be going to the paper maybe to draw a financial year or if we need extra help. But I think the first few questions are just going to be theory-based. So how should inventory be valued according to the prudence concept? So be careful, prudence concept just tells us we're not allowed to ever overvalue our assets or our income. So when it comes to assets like inventory, we try and take the most conservative approach. We try and use the lower of cost, already catches my eye. Lower of cost, if we have two choices, obviously we want to choose the lower of the two. So in a normal scenario, selling price will be higher. But if, for instance, your inventory gets damaged and it's not being sold for what you thought you could sell it for, and the cost price is maybe higher than the selling price, then you choose the lower of cost. But also linked to that is net realizable value. Now, net realizable value, realizable means what you can sell it for, what you can realize it for. And the net part means you have to minus something, like with debtors. If we say net debtors, you minus something. So if I can just explain net realizable value to you, if you have to sell something and you can maybe only sell it for $8 and you still have to fix it and you spend $2, then we show it at $6. And if we compare that then to maybe the cost price, which was maybe $15, then obviously we choose the lower of the cost. So after all of that, please choose option B. Okay. Next, why is depreciation charged on non-current assets? I'm thinking of a specific student that I think fell for this first one, but never again, guys. All of these can be slightly correct, but the one that you want to choose that's the most correct is to spread its cost over its useful life. It's part of the matching principle or part of accruals. So I definitely want to say D, but I just want to say, Isham, if you did say one of the others, it's not completely wrong, but it's not the reason why we do depreciation. It's useful, but it's not the main reason. Okay, number 3. The net book values of companies' non-current assets are shown as follow. So remember, it's already net book. So how do we get to net book? We would have said cost minus accumulated depreciation or provision for depreciation. So these have already been subtracted. During the year, we purchased some. We were also selling some at a profit of 1,000. And then the depreciation charge was 8,000. So this is actually one where I'm going to quickly just stop sharing for a second. Stop sharing my face. Let me see, remove that pen. Okay, and I want to quickly ask you to recreate a note for me. This note is called note number 3 if you are in the CAPS or IEB syllabus. But in Cambridge, we don't have a name for this note. You can also call it PPE if you're in university, property, plant, and equipment. We can just call it maybe the non-current asset note. Okay, so if you're familiar with this note, it starts off with cost minus accumulated depreciation, but that then results in something called net book value. So I'm just going to cut to the chase. You don't have to always go cost minus accumulated. You can start with net book value. Maybe just go check what your net book value was in the beginning of the year. 20,000. Okay, so that's just cost minus accumulated will give you net book value. Then normally there's 3 movements that happen during the year. Because remember, with your non-current assets or your property, plant, and equipment, to get the opening net book value, to the closing net book value. Let me just do the closing net book value now. There's only actually three main things that can happen at school level. So the first one, I would say additions at cost. The reason I want to say at cost is because the next one is disposals at carrying value. You know, I'm using abbreviations. Please don't use abbreviations in the exam. And then the last one would be depreciation. I've got also a nice little thing that you can write on the side here. This is a beginning, during, end, BDE, so that you just remember that this was the beginning, this happened during the year, and this is the result at the end. I can also, if you want, I mean, these little blocks, cost minus accumulated, they could also be here at the bottom. Remember, I'm also preparing you for exams, or well, for university exams. And then this is the format they want. Cost minus accumulated, and then here would also be cost minus accumulated depreciation, with obviously the answer of that at the top. Okay, so maybe I should have also just moved the numbers a bit to that side, but ultimately the 20,000 will undergo 3 changes and it will get to the 15,000. Can we just quickly check the information? Let's just check the information again. Now that you've got the format, very important to have the format ready. So during 2017, non-current assets, 7,000 were purchased. So I'm going to put that under additions at cost. I hope you also have some kind of note for yourself. Additions at cost were purchased. Non-current assets were sold at a profit of 1,000. Okay, I'm going to just say X then for the disposals at carrying value. And then the depreciation charge was 8,000. Okay, can we just quickly go back to the writing? Can I also ask you, the depreciation must be in brackets. Okay, and obviously this should be lined up now. My OCD is shouting at me like that plus that plus that minus that must give you 15,000. So if you've got a calculator, smart calculator, you're welcome to just type it in, lazy man's maths. You can say 20,000. I hope you can see what I'm typing in. Plus, so we're going to type in this whole sum, 7,000. Then I don't know if you know how to go plus alpha x. It gives you an x there, which is lovely, because then we don't have to work it out manually. Minus 8,000, then just check this move. Alpha equals 15,000. 15,000. And then you go shift, solve. I don't know if you saw my steps there. Shift, solve. Then it's asking you, do you want to solve for x? Yes. But then you have to press this bottom equals at the very end. Equals. And it gives me minus 4,000. Okay, minus 4,000. So this answer is actually 4,000. Or you could have said 4,000 in a bracket. So then what that means is you sold your goods, or not your goods, but your car or your vehicle. What we were selling? Okay, they just say non-current assets. That's why I can't remember what we were selling. But we sold our non-current asset with a carrying value of 4,000. But be careful. I think on the multiple choice, there is now an option for 4,000. Don't fall for it, because you must remember that we made a profit of 1,000. So that means we sold over the book value or the carrying value, which means we actually sold it for 5,000. Did I lose my ability to write? Yeah, there. 5,000. So I hope you're happy with how you should recreate the PPE note or the non-current asset note. That will then help you to figure out any missing value. Sometimes depreciation is missing. But you start with net book value at the beginning of the year, the 3 movements, and then net book value at the end of the year. Okay, number 4 is theory-based again. Which costs may be capitalized as land and buildings? So it's normally like once-off costs, not running day-to-day costs. So once-off costs, construction cost, yes. Insurance premium, although a lot of people think that there's a lot of benefits to insurance, it's not like a long term. Every month that nothing happens, that money's gone. So insurance is not a capital expenditure, it's a revenue expenditure. Legal fees once off, yes. Hopefully you don't get sued every month. So legal fees once off. And then redecoration, some people might argue that it is improving it, but it's still something that you have to do again. So not number 4. Okay, so I think you get the gist of me trying to draw a cross there. So which one are we choosing? Number 4, B. Only 1 and 3. Okay, so the first 4 done. First page done. Done. Let's move on to number 5. Fred wishes to identify the unpresented checks of his business. Which side of the cash book and which side of the bank statement does he need to compare? Please remember, cash book is normally an asset, so it's a plus minus account. So if there's checks going out, the cash book definitely credit side. So now we're choosing between A and B. Bank statement, you must remember, is from the bank's point of view. So it must be the opposite of us. The bank will actually do it as a debit then. So I would definitely go for B. Process of elimination and knowing your theory well, especially the crossing over from our books to the bank's books. And then 6, how is a decrease in provision for doubtful debts recorded? A decrease is good. We're providing for less doubtful debts. So definitely added, if you're thinking of your income statement right after your gross profit, that's where you add your income, additional income. And we will say then provision for doubtful debts adjustment. It went down. Maybe you want to quickly see a provision for doubtful debts account. Yeah, let's do it. I can do a quick one. I am a big fan of abbreviations, but please, you write out the full thing if it's paper 2. Provision for doubtful debts is a negative asset. So you'll be working on this side, almost like depreciation. So provision for doubtful debts, if you want to decrease it, let's say you had 1,000 and then next year you actually want it to be 800. Then you'll see you want to decrease it. So when you balance the account and you want to make sure that there's an 800 closing balance, obviously there's a lot of gaps here. I hope you can still follow me. Where is my missing amount then? 200. That's the amount that will go to income statement. And that's the amount that will decrease your provision. But it's actually a good thing for the income statement because on the income statement, it'll be on the credit side. So let's go see again what options we've got. In the provision for doubtful debts account, did you remember where I was? I was on the debit side. So for 6, let's just double check. 6 has to be B. So let's just circle B. B. There we go. So add it to gross profit and then on the debit side of provision for doubtful debts because you want to decrease it. And provision for doubtful debts, if you're making some notes, it's a negative asset account. The balance is on the credit side. Because remember, it eventually then minuses from trade receivables in your statement of financial position. I hope that's not in too much information, but if you're thinking where this is going to go, it's going to go to SFP. It's going to actually be under the note trade and other receivables, and it's going to minus from your debtors control or minus from your trade debtors to make it net trade debtors. And that's also part of prudence. You see, I'm just bringing in a little bit of theory there. 7, a company's year end is 30 June. So 30th of June, you're welcome to draw a financial year, even though I don't really think it's necessary for this one. The problem is we forgot to count our inventory and we only counted it on the 6th of July. So we almost have to reverse the effects of these transactions to get back to the 30th of June. So on the 6th of July, maybe if you don't want a timeline, you're welcome to just maybe draw some kind of number line, 6th July, but we actually want to get back to 30 June. So my biggest problem here, let me just move you guys up straight. So the amount that we have on the 6th of July is 86,500, but I want to know what X was. I'm very fond of using X's everywhere because it really helps just with quick calculation on the calculator. So now we have to work our way back to this X. You'll see during this time, maybe you want to just read on your version. Maybe let me share. Okay. There was sales at cost. So the sales at cost, I know we're using the periodic system where you don't really link the cost of sales to every sale. That's the perpetual inventory system. You'll learn about that later stages. But you must just realize that every time you sell something, there is a cost that's linked to that sale, even though we only count the inventory at the end of the year. So there was missing inventory or inventory that went out of our stock. So you're losing inventory. That's what I'm trying to say. So you're losing 1750. Then you bought an additional 1550. Then you returned inwards. Let me just think. People returned to us. So return inwards. We got some stock, 310. And then we sent stock back to our suppliers at 190. So we lost stock. So if you want to maybe look at it like this one you would have minused. This one you would have added. Maybe it will be easier for me to just put the things in brackets that are supposed to be in brackets, if I can manage that. Okay, so, oh my word. Okay, see, I'm better with writing on a paper. So sales we lost, returns inwards we gained, purchases we gained, and return outwards we lost. So maybe if you could just keep a little tally here of what will be added and what will be subtracted. But let me show you what I've actually got on the side. I don't know if you can read that, but it's X minus 1750 plus 1550 plus 310 minus 190 equals 86,500. So guess what I'm going to do? Type it into the calculator. It's really not worth risking doing all of this in your head. So please just type in that whole thing, and then let's see if we've got a potential option. Maybe you guys can look at the questions along. I'm just going to feed it into my calculator. Remember all the steps of going alpha equals 86,500, shift solve equals. Okay, so I get 86580. 86580. There we go. I hope that makes sense. Or if you weren't using a side note, you could obviously also work on the paper. Then you would have just, it's just important that you start with an alpha X. So there would be an X that starts here on the 30th of June. All of these 4 things happen, and then you equate it to 86,500. Or I know all our brains don't work the same. If you wanted to work in reverse, then you add all the things in brackets and you minus all the things that are not in brackets. Good luck with that. I can't do that. So then let's do 3 more questions, and then we'll have a little bit of a break and we'll have a new video. A purchase ledger control account. That's my cue to actually start drawing it. Purchases ledger control account. Start talking to me or start thinking about what type of account that looks, or what type of account that will be and what that will look like. Purchases ledger control account is liability. So minus plus, we owe them. So if we're thinking about opening balance and closing balance, that'll be on the right-hand side. It will be a credit because it is a liability. So let's maybe go slowly through that list. You're going to open your own purchase ledger control account. I'm going to show you what I'm doing here on the side. I just want to get these amounts. Opening balance, debit or credit side, 1,200. Closing balance, maybe I should show you what I'm doing here. Closing balance, this is how you should write it in, is 1,300. But then that'll be BD, so this will be your CD. Balance BD, balance CD. Important also to classify your account, to have a minus and a plus and all of that. So that is what I would like to start with. And then let's make some decisions together. Purchases, will that make the debt go up or down? Purchases, make the debt go up. Payments made, makes the debt go down. So debit side, left-hand side. Discount received, 300. And then we just have to make some decisions. Okay, so now that we know which side is which, can you, I don't know who's great with arithmetical maths, but you can make a quick decision which one's more. I think this side is more. So let's quickly add 18,400 plus 1,200, 19,600. I might be wrong. Let's just see. 19,600 minus 17,800. Or maybe we should just add the debit side. 17,800 plus 300 plus 1,300. 19,000. Oh, I'm right. Thank goodness. 19,400. I'm just going to write at the top there, which means there's a missing amount here. Didn't really leave space for myself. So maybe let me write in red. The missing amount is, come math people, 200. Okay, so if there's a missing amount on the debit side, I think that was one of the options. They asked, where should my contra be? Which entry appears in the control account to record the contra with the sales ledger control account? Okay, so we should know, obviously, contra must always be minus, so it would have been B or D anyway. Because contra, remember, if I owe you and you owe me and we call it quits, both of us owe less. So contra, always on the debit side of purchase ledger control account. If you were in the sales ledger control account, that would also reduce your debt. So that would be on the credit side then, or sales ledger control account. Hope I'm not talking too fast. I've had some coffee. So I hope that we're all in agreement then for 8 to be B. You saw the account that we recreated. That is exactly what I wanted. Okay, 9. Which error would result in the creation of a suspense account? So remember, a lot of errors are not detected with a trial balance, error of commission, principal, all of those. And then you can't use a suspense account for them because you wouldn't be able to detect them. So there wouldn't be a problem with the trial balance. Remember, the suspense account, we create the suspense account to help with the balancing of the trial balance so that we can at least publish something and then maybe later start fixing it. So let's just read through each one. 9A, crediting the commission received account with a rent received account. That's just an error of, it's actually an error of commission, but it's nothing to do with commission received, but it just means it's the same account. It's just same type of account. It's just the wrong account. So same class. But that won't really make a difference because our credit side and our debit side will still add up. So we don't need a suspense to fix that. We take it out of rent and we'll put it into commission. We will use the two accounts to fix it. Then crediting the discount allowed account with a discount received account, that is a big mistake, but we can still fix it within those two accounts. So then 9C, debiting the bank interest paid account with bank interest received. That is a problem because if you think about the double entry, maybe I should just quickly draw a few things here. So let's just discuss. I just want to see where my question is on the hard copy. Debiting bank interest paid. So if I open a bank account and you're actually paying from bank, remember bank is an asset. So if you're paying, you'll be on this side. So my big problem here is they say debiting bank interest paid account. Bank interest. Debiting bank interest paid account with bank interest received. Oh, okay. So actually the real scenario, let me rather make a hashtag now. The real scenario is you received money, but then the mistake happened and you took that money into bank interest paid. Bank interest paid. So what you're supposed to be doing, let's say if you had to fix this, is you're supposed to be going to bank interest received. So I want to be here. So for me to be here, bank interest received, in a perfect world, we would have just gone, just ignore that. We would have just gone debit bank, credit bank interest received. But now we did a debit. So there would be a lopsided. This will be revealed with the trial balance. And how do I fix it? I need to make an entry here to obviously neutralize bank interest paid. And then I need to go here into bank interest received. So for me to do 2 credit entries, I need a suspense account. I really need it. Let's just maybe open a suspense account then. So I really need my suspense account to carry this burden for me. It would have a bank interest paid entry and it would have a bank interest received entry. So if you, sometimes with paper 2, you do have to open a suspense account. This is what the suspense account would then help you with, is fixing a one-sided error. And that's also why I want to choose then C. We can quickly talk about D if you want. Debiting the motor expense account with the purchase of a new car. Both of them are supposed to be debit side. The purchase of a new car, you debit vehicles. Now you're just debiting motor vehicles or motor expense. So it's not a trial balance issue, but it is quite a serious thing that you're doing. It's called an error of principle because you went to the wrong class of accounts. And just to tell you how serious this is, the magnitude of what you did, you'd then maybe have depreciation where you're not supposed to have depreciation. Your income statement will be wrong. Your statement of financial position will be wrong. So lots of issues with D. But I'm going to just, for this question, say C. Then question 10, then you can have a quick break and then we'll do another one, another video for, I think I'm going to continue from question 15 because the next 4 questions are left out because it's not in the syllabus. During the month, a company lost a quantity of inventory in a burglary. The table shows the company's results for the month: opening inventory, purchases, revenue, closing inventory. A gross profit on all sales of 30% had been achieved. Maybe if you just want to make a note for yourself, that 30% on sales is also called margin. That's your gross margin. It's not markup. You'll never go over 100 because your selling price is going to be 100. And then I'll show you what we do with our 1/2 of the 30%. But then they ask us, what was the cost of the inventory that was lost? So my advice here is let's do the cost of sales 2 ways. Let's do it in 2 different ways. Let me help you with cost of sales, the normal formula, where we go opening inventory plus purchases minus closing. Can I quickly do that on my calculator? Opening inventory, you've heard this before now, plus purchases. Remember, there's a lot of other things that could be here, now, like minus purchases, returns, goods for own use, carriage inwards. So opening inventory plus purchases, I mustn't distract myself, minus closing inventory is 200. I'm just going to write that down. 236,000. That's what the books are telling me. What is happening? Or that's actually what my physical inventory take is telling me. I went to go count it, and this is what is happening in real life. Let me rephrase this. This is what's happening in real life. The book, the one that let's say in theory is telling us is that there's 30% that we were supposed to achieve. So this is what the real scenario, the cost of sales is showing us, 236,000. But if I want to work out my actual cost of sales according to my books or my formula, I want to do something called 1/2. Please just remember, if you have selling price, that's 100% if you're using gross margin. And if you then have a 30% profit margin, that means your cost is 70%. So if you go 330,000 times 1/2, that gives me 231,000. So then I quickly make a comparison. Let me just get my wording right. So this is what the warehouse is basically telling me, or the on the ground cost of sales. But this is my in theory cost of sales. This is what I really wanted my cost of sales to be. So why is my cost of sales higher? It is because my closing inventory was actually smaller, which means there was stock missing. So if you want to get the difference then of the two, just quickly work that out. I think that's 5,000. That 5,000 is then the stock that was stolen, because if that 5,000 was still around, my closing inventory would have been 9,000 and my 2 cost of sales would have matched, because it should actually, if you're aiming for 30%, you should try and get to 30%, unless there are things stolen, or maybe that there was a sale or something, like a end of season sale. I think this is a good place to stop now. So I'm just going to quickly let you have a bit of a rest. That was the first 10 questions. Remember, normally This should take only, if you think about, you have an hour. Just had to quickly go work out exactly how long that should have taken you. That should have taken you 20 minutes because it's a 30 mark paper and you have an hour for that. So that means 2 minutes per question. So that should have taken you 20 minutes. It's okay. We had a lot of extra things that we were discussing. So thank you. I will see you again soon.